Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. Korea rises to 14th place in stock market value despite heightened uncertainties both at home and abroad. For the first time ever, Korea records an automobile trade deficit with China, partly due to an increase in Korean automakers' production within the neighboring country. These stories and more coming right up. But first, Audi Volkswagen Korea has appeared at a closed-door hearing held by Korea's Environment Ministry on Monday to explain its position on the government's push to suspend some of its car models. The government has been moving to enforce a sales ban on a total of 32 models from the group, saying that test documents for emissions and noise levels were fabricated to win over certifications. The automaker's Korea office announced on Friday that starting today, it will voluntarily stop sales of the models under fire, including the Golf, Jetta TDI, Audi A6, and other diesel and gasoline vehicles. Within a week from the hearing, the government will decide whether to order a sales suspension, a move industry watchers say will likely be inevitable. If the certifications of certain cars are revoked, the German car maker will not be able to sell those models until they are renewed. Korea Hydro and Nuclear Power Corporation has sealed a deal worth nearly $900 million to operate 4 nuclear reactors currently under construction in the United Arab Emirates through 2030. Under this deal announced on Monday, the state-run energy firm will send over 200 personnel every year to run 4 nuclear reactors developed with Korean technology, and Emirates Nuclear Energy Corporation, the firm's UAE counterpart, will bear the costs. The deal will cover not only wages, but also education, housing, and other costs for a total of nearly 3,000 workers. The UAE was initially set to operate the 4 reactors once completed by 2020, but decided to bring in Korean workers to better learn techniques and related skills. Construction of the 4 nuclear reactors began in July 2012. And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Hello, Shin.
All right, let's get started by looking at the Korean stock market. Tell us about the last day of trade and the market's overall performance last week.
Yeah, on Friday, the Kospi closed at 2010.34, down slightly compared to the previous session. The Kospi finished its last session of the week with a slight downtick as well, closing at 707.54. Despite the fact that both foreign investors and institutions bought massive amounts of shares, both indices lost steam in climbing any higher after a huge rally last week. Foreign investors continued their stock buying for 12 consecutive sessions, while institutions were net buyers for the first time in 9 sessions. On a weekly basis, the Kospi fell by 0.34% compared to the previous week. The European Central Bank, or the ECB, which held its first policy meeting last week since the Brexit vote, failed to satisfy global financial markets as the central bank didn't roll out any additional measures to address sluggish economic conditions.
Then how did the Korean stock market close on the first day of this week?
Yeah, the Korean equity market didn't move much on the first session of the week. The Kospi rose by 0.1% to close at 2012, while the Kosdaq fell slightly by 0.3% to close at 704. The Kospi once touched 2020 thanks to massive stock buying by foreign investors, but soon erased intraday gains in the late hours of the session. Samsung Electronics fell by 0.9% to close just above the 1.1 million Korean won mark after dipping below that level during the session. Ahead of market events scheduled later this week, investors are seen as taking a wait-and-see mode today.
And speaking of major market events for this week, policy meetings at central banks are expected to be the headline grabbers, right?
That's right. All eyes will be on the U.S. Federal Open Market Committee, or the FOMC, convening on Tuesday local time. The results will come out Thursday morning Korean time. Most market experts do not expect the Fed to raise interest rates at its July meeting. But market participants will be looking for more clues on a potential rate hike in September. Also, the Bank of Japan, or the BOJ, will start its policy committee meeting on Thursday. Expectations for more stimulus have been surging. A Reuters poll taken recently found 23 out of 27 analysts, or about 85%, predicted the BOJ will ease policy further at its July 28 and 29 meeting. The Japanese yen has weakened significantly, reflecting these expectations.
And also ongoing is the U.S. earnings season, and we have about 35% of S&P 500 companies set to release their quarterly results this week.
Exactly. Tech giants including Apple, Facebook, Alphabet, and Amazon, as well as energy companies such as ExxonMobil and Chevron, will disclose their quarterly earnings this week. As of July 22, and with 25% of the companies in the S&P 500 having reported their earnings for Q2, 68% have reported earnings above the mean estimate, and 57% have reported sales above the mean estimate, according to market research firm FactSet. The blended earnings decline so far is 3.7%, better than the minus 5.5% growth expected on June 30. In other words, U.S. companies are mostly beating earnings expectations, providing a positive catalyst to the market. We'll see if the momentum will continue throughout this week. This has been Choi Jin-seok for Business Daily.
Now, there was mixed performance in the global stock market in the first half of this year, but Korea managed to fare relatively better, moving up a notch in its global market cap ranking. Our Kim Min-ji has more.
Despite uncertainties at home and abroad, Korean shares are faring better in comparison to that of other countries. According to the Korea Exchange, the country's market cap stood at $1.26 trillion as of the end of June, up 2.3% from the end of last year. Making up 1.9% of the global market cap, that puts Korea in 14th place, climbing one notch in just 6 months. During the same period, the global market cap fell 1.3% to $66.3 trillion. The New York Stock Exchange, which makes up the largest share of the world's market cap, edged up 5.2% on the back of signs of recovery in the U.S. economy. Brazil's stock market, which ranked 20th, saw its market cap rise over 35% thanks to a pickup in global oil prices and other commodities. But major economies in Asia and Europe saw their market shrink due to uncertainty stemming from Britain's decision to depart the European Union, as well as concerns about a possible U.S. rate hike. The Shanghai Stock Exchange shed 17%, while Hong Kong saw its market cap decline 6.7%, and Japan's 4.3%. Jitters were also felt in Europe, being more directly exposed to Brexit, on top of seeing an overall economic slump on the continent. Germany's market cap fell more than 10%, while the UK also shed over 10%. Kim Min-ji, Business Daily.
The managing director of the International Monetary Fund, Christine Lagarde, has highlighted the importance of structural reforms and trade liberalization amid political uncertainty in the aftermath of the Brexit vote. She made the statement on the last day of the G20 finance ministers and central bank governors meeting in Chengdu, China on Sunday. Lagarde said that structural reforms are important to bolstering economic growth and sharing the benefits, as they can lift both short and long-term growth and make it more inclusive. She added that further trade liberalization is also crucial to enhancing productivity and global growth. Korea's trade balance with China in the auto sector was in the red for the first time in history. This came as exports plunged drastically, while Chinese car imports surged during the first 5 months of this year. Our Lee Ju-young reports.
Korea has posted a trade deficit in the auto sector with China for the first time ever. According to the state-run Korea Institute for Industrial Economics and Trade, the deficit came to around $1.7 million during the first 5 months of this year. This is a significant difference compared to the surplus posted in previous years. The institute says this is largely due to the fall in Korea's exports to the neighboring country, which have been consistently sliding over the past few years. While outbound shipments fell 47.6% in 2015 on year, they dropped again this year by a whopping 93.7% to $27 million. One of the contributing factors has been an increase in local production by Korean automakers in China due to the high import tariffs of 22%. Not only that, Chinese automakers are narrowing the competitiveness gap with Korean counterparts thanks to massive corporate investment in research and development as well as greater support from the government. As a result, within the Chinese market, local automakers saw their share grow to 41% last year from 38% in 2014. Korea's imports of Chinese brand cars have also been recording an annual average growth of roughly 10% since 2007. Experts say the share of Chinese cars in the Korean market is still below 1%, but this figure is set to rise as Chinese minivans and light trucks are priced at about 75% of Korean models. They also add that strengthening the cost competitiveness and brand image should be a priority in securing a stronger toehold in the Chinese market, as other competitors like electric car maker BYD are poised to further challenge Korea's auto market down the line. Lee Ju-young, Business Daily.
Japan has overtaken Korea as one of the most popular travel destinations for independent Chinese travelers or those not traveling in tour groups. A study carried out by Bloomberg and a Chinese Tourism Research Institute found that over 913,000 individual Chinese travelers made a trip to Japan in the first quarter, or 24% more than the 730,000 that came to Korea. Now, this means that the number of independent Chinese travelers to Japan has more than doubled within a year from the 450,000 last year, far behind Korea at 670,000. The main factors behind the shift are thought to be the depreciation of the Japanese currency and an easing of visa requirements for Chinese tourists. As children pour out of schools for the summer, seaside towns along Korea are running special programs that aim to provide a vacation that takes care of two birds with one stone. A refreshing ocean getaway that also helps the local communities. Our Eunice Kim tells us more.
Children, typically surrounded by the asphalt of the city, crawl around a mudflat covered in the sludge. Some sit around in the puddles and chat, while others enjoy a mud pack. Dig a bit of the mudflat, and the young explorers discover crabs within, feeding on the muck, rich with nutrients in the coastal wetlands of southwestern Korea. Meanwhile, over on the east coast in Samcheok, Gangwon-do province, children are harvesting salt in a salt pond, seeing the stuff glisten as they push a stick with all their might. Canoeing is especially fun when the floor is clear, offering a glimpse of life underwater. Others opt to jump right into the deep blue for an expedition of their own.
It was a little scary at first, but it's more fun than I thought.
We started this program to share our beautiful scenery and to help the livelihoods of our fishing community.
There are about 90 fishing communities around the country running such experience-based programs. And of them, the Ministry of Oceans and Fisheries has picked Gochang in Jeollanam-do province and Ulsan in Gyeongsang-namdo province among its recommendations for this summer holiday. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.